Welcome, and thank you all for participating in this press briefing on IFIAR's survey of 2013 inspection findings. I'm IFIAR Chair Louis Ferguson, and I'll be presenting the survey results together with my Vice Chair, Janine van Diggelen from the Netherlands. I'd also like to note that we have approximately 30 representatives of other audit regulators in the rooms who are here attending the IFIAR annual plenary meeting, and who are here to support our efforts to share the news about IFIAR's second survey of inspection findings. We'll give opening statements and then open the floor to your questions, first from reporters in the room, followed by those on the phone. You may also email your questions to Colleen Brennan. This meeting is being webcast and is available through teleconference. For those of you who may not know, IFIAR, the International Forum of Independent Audit Regulators, is an association of independent audit regulators whose mission is to provide a forum to share knowledge and experience in overseeing auditing around the world. Independence means that all IFIAR members are independent of the auditing profession. IFIAR presently has 50 members from countries in Africa, the Americas, Asia, Europe, the Middle East, and Oceania. We are presenting today the results of our second annual global survey of inspection findings from our members. This year, 30 countries submitted results, which are primarily from inspections of audit firms affiliated with the 6th largest international audit firm networks. Our first survey, released in December 2012, included results from 23 members. The report on 2013 findings summarizes key inspection results from audits of public companies, including systemically important financial institutions. These results came from inspection reports issued during the members' most recent annual reporting periods that ended by July 2013. IFIAR members reported findings from inspections of 3 categories of audit firm activities: audits of listed public interest entity, PIEs, audits of systemically important financial institutions, SIFIs, including globally systemically important banks, GSIBs, and internal systems for firm-wide quality control, that is, inspection of the audit firm's own quality control systems. Inspection findings are deficiencies in audit procedures that indicated that the audit firm did not obtain sufficient audit evidence to support its opinion. This may include a failure to identify or address a potentially material error in application of an accounting principle. A deficiency does not necessarily mean that the audited financial statements themselves were necessarily materially misstated. The findings go to the quality of the audit work done on those financial statements. The results show that the leading area of deficiency in inspected audits of public interest entities or public companies related to auditing fair value measurements, internal control testing, and procedures to assess the adequacy of financial statement presentation and disclosures. The leading areas of deficiencies in audits of systemically important financial institutions, including global systemically important banks, related to auditing of allowance for loan losses and loan impairments, internal control testing, and auditing of the valuation of investments and securities. Audit firms' own quality control systems had the highest number of inspection findings in the areas of engagement performance, staffing and compensation, and independence and ethics requirements. The high rate and severity of inspection deficiencies in critical aspects of the audit and at some of the world's largest and systemically important financial institutions is a wake-up call to firms and regulators alike. More must be done to improve the reliability of audit work performed globally on behalf of investors. The survey makes clear that these important inspection findings are prevalent across many nations and firms. The inspection themes with the highest number of findings were consistent with the 2012 survey. However, because the nature of the survey does not provide an adequate basis for quantitative year-over-year comparison of the quality of audit performance, IFIAR cannot conclude that audit quality has either improved or deteriorated since the previous survey was conducted. IFIAR has an important role to play in monitoring and promoting audit quality across borders. In monitoring the firm's progress in these areas, IFIAR hopes to gain insight into whether the firms are successful in addressing firm-wide issues and accordingly promoting consistency in the execution of their audits. IFIAR publishes the results of its surveys to inform regulators, investors, the financial community, and the public at large about the current state of inspections of audits of public companies, including financial institutions around the world. IFIAR members together and separately pursue improvements in the reliability of audit firms' work and of the opinions expressed on financial statements. I see this survey as a first step for IFIAR in promoting cross-border audit quality. Now, Vice Chair Van Diggelen will walk you through the next steps. Janine?
Yeah, thank you, Lou. Good morning, good afternoon, and good evening to everybody here on the phone and watching our live stream. I'm Janine van Diggelen, Vice Chair of IFIAR and Head of the Audit and Reporting Quality Division at the Netherlands Authority for the Financial Markets, the AFM. As Louis Ferguson said, the survey outcomes we present today are a wake-up call. First of all, for the audit firms. The recurrence of global inspection findings indicates that audit firms should take steps to develop robust root cause analysis. A well-performed root cause analysis will provide the firms with a thorough understanding of the factors that underlie these findings, which also include governance, cultural and behavioral aspects relevant to the deficiencies. This is necessary for audit firms to take appropriate remedial actions. Apart from the need to remediate the findings through root cause analysis and improvements based thereon, the findings also demonstrate the need for firms to continue improving their auditing techniques as well as their internal monitoring policies and procedures. The efforts by the firms at local levels also will be monitored, of course, by our own members. At IFIAR, we will continue to monitor developments in audit quality by conducting surveys and engaging with the largest audit firms' networks, among other things. We expect that the root cause analysis and remediation efforts, as I mentioned before, will result in demonstrable improvements in audit performance. We will continue to meet with global network firm leaders to discuss inspection results and actions the firms will take. In these meetings, IFIAR expects the firms to provide information about the results of root cause analysis, the performance measures used to assess progress, and whether measurable improvements are being made. The global network firms have agreed to provide such information. The survey results also can be used to inform standard-setting activities, both nationally and internationally. Our members can use the survey to inform their respective inspection programs. We believe the only way to improve audit quality is to strive for sustainable solutions. Investors and other stakeholders need to be able to rely on the auditor's work. During the financial crisis, too many questions were raised about the role of the auditors. The public's trust in the audit function needs to be strengthened. This is one of the fundamental challenges that the firms are facing. As regulators, we recognize our responsibility to see that firms worldwide make the changes needed to meet investor needs and also improve audit quality on a global scale. Thank you.
Operator, we are now ready for the Q&A. We'll first take questions from reporters in the room and then take questions from the conference call. and then I will read any questions that are emailed to me directly.
And ladies and gentlemen, if you wish to ask a question, please press star, then 1 on your touch-tone phone. You will hear a tone indicating that you've been placed in a queue. You may remove yourself from the queue at any time by pressing the pound key. If you were using a speakerphone, please pick up the handset before pressing the numbers. Once again, if you have a question, please press star 1 at this time.
I guess I'll ask the first question. I'm Sarah Lynch with Reuters. Given the fact that there's so many persistent problems that you're seeing year after year, I'm curious if first you might be able to talk a little bit more about why we're not seeing more enforcement actions against auditors generally, and also, you know, why do we keep seeing all these problems? I mean, we've been reflecting on what happened with the financial crisis now for several years and the problems that happened with audits at that time, and it just seems like things don't improve.
Well, let me take a first crack at that, and then Janine can join in. First of all, I think there is a reasonable amount of enforcement action. Part of the problem in the United States, of course, is that the enforcement actions of the PCAOB are private until the end of the results. So you do not see the amount of actually investigative activity and indeed proceedings that are being brought within the PCAOB until the very end of the matter or until a matter is settled. So that's part of the regime, or part of the issue in the United States. I think around the world, though, there is a reasonable amount of activity. The question of why do these issues persist is obviously an issue that is at the heart of what we do as individual regulators and what IFIAR is focusing on. And so there has been an increased focus and a move toward having both regulators look at and forcing these big networks to examine, as Janine mentioned, the root causes of these things. What are the causes? And this goes into including things like behavioral analysis. What are the economic pressures? What are the behavioral factors that cause the persistence of these problems? Why do they not get better? Is it a question of the way the firms are structured? Is it a question of their economic incentives? Is it a question of leverage ratios? What are the issues? And this is something that we're only beginning to look at. I will say that I think as we begin to look at these things and as the firm look at them, I believe there will be progress made on this, and I believe we'll come up with some quite interesting things. Janine, do you want to add to that?
Yeah. What is also maybe interesting to add is that also with this survey, we have also put in some information on the powers that our members have nationally, including you can see that the vast majority of our members have enforcement powers. So that's also with respect to your first question on the enforcement activities. And indeed, also if I look at the Dutch perspective, there have been enforcement actions taken, but it takes indeed, because of all the legal proceedings, it takes some time before these come out in the public. And that is a general thing, I think, that all IFIA members are facing also in their national environments. Regarding why it takes actually time before we can actually see any measurable improvement in audit quality, I think it's also fair to say that independent audit oversight is actually relatively new, so to speak. In some parts of the world or in some jurisdictions, these independent structures are actually still being established, and in other parts of the world they're already out there more than 10 years. So there is a variety, but of course it is the sole responsibility of the firms to make sure that they deliver audit quality on their audits. And but since we are now with them really also exploring and actually stimulating them to do a real good in-depth root cause analysis. And we come to the point that we also think that structural, cultural, behavioral aspects may play an important role. These are typically things that you don't can turn over overnight, that you can improve overnight or change overnight. Tone at the top at the audit firms, at their international leadership level is very important to drive these changes. And that's where we're having also discussions about with the international leadership of the global network firms.
Yes, and now we have a question from Laura Salisbury from B&A.
Since this was a second survey, were you able to detect any kind of improvement or areas that you felt there, that there had been some movement in the direction you were looking for?
The results of the survey are actually very consistent with the 2012 survey. There are problems with the comparability of the data, part of it being that inspection cycles for different countries are different. Sometimes a country will focus on a particular area in its inspections one year that they didn't focus on in another one. So over a 2-year period, it is very difficult to compare the data. We believe that we're doing 2 things to address that. One is to look at the survey again to see if we can target the questions more so we will be able to get that kind of comparative information. And secondly, I believe that over time, with a larger body of data that represents a longer time period, that we will be able to do that kind of analysis. But the goal, the hope with the second survey was to be able to provide clearer analytical work on the survey, but the data unfortunately did not lend itself to that.
We have another question from Sarah Lynch of Reuters.
I just was curious, there's been a lot of talk lately and concern about the big 4 audit firms returning to the business of non-audit consulting services. And I was wondering if that came up during your 3-day meeting here in Washington, and if maybe anyone is looking at enacting new rules to address this, or if this is a concern. Thanks.
It is a source, I think, of great concern to all regulators around the world. We, in fact, had a breakout session, actually had 2 separate breakout sessions at the 3-day meeting on the economic model of the firm, looking precisely at the question of the changing economic model of these firms. It is very clear, the evidence is very clear that the audit practices of the big networks are growing much more slowly than the other practices, particularly the advisory practices and things like that. The issue is frankly very complex. Audit itself is changing. The use of data and data analytics is changing. And as those things become much more important in the process of audit, the firms need to acquire new skills. So they make a cogent argument that in order to get people who are skilled in data analytics, who are skilled in the use of the analysis of big data, for example, where instead of simply doing testing by sampling, you look at the entire general ledger, you look at every transaction that a company has done and analyze those by exceptions and by outliers. You need a whole new set of skills that are not in the natural skill set of the auditor. So they argue that they are driven, that they need to do that in order to be able to do new work. On the other hand, it raises serious concerns about differential levels of profitability in these businesses, differential rates of growth, where the economic incentives are, and to what extent does audit quality suffer as a result of that. So I look at my fellow regulators around the room, and I think this is an issue that every single one of us is concerned about. Janine, you want to address that too?
Yeah, important is that we now get a better understanding on the dynamics, actually also how actually their current business model works, but also in view of the developments that Lewis Ferguson was explaining going forward and looking into the future. What are actually the risks that those developments could mean to audit quality? So this is a real concern we are having as IFIAR members.
Well, I mean, are you going to be looking to do anything about it? And also, do you think that the rise again in consulting is maybe contributing to the deficiencies that you're finding in inspections across the world?
Well, I think it's what I said. We need to get a better understanding on the dynamics of the business model, on the dynamics and the impact that the current structures have, and also the changes with the data mining, data analytics. These are new innovations that the firms are working on. how that will, in relation to their talent issue, how that all will work out together. And so for us, it's very important to get a better understanding what the impact could be and will be, also in view of risks that this can impose on audit quality also going forward. But nevertheless, now we already have, of course, big concerns on audit quality if you look at the current audits that are being performed. And we see actually really a large commonality in the nature and extent of the inspection findings amongst our members, so on a global level. So we're actually very concerned, because you cannot say, if you look at the inspection findings and the survey that we published today, that there are typical country-specific or firm-specific issues. No, there are sector-wide issues here. So these need to be addressed also there are things here that needs to be addressed on a global level, and that's also why it's so important that IFIAR continues its engagement with the international leadership of the largest global network firms.
One of the things we need to be careful of, I think, and when you ask the question about remedial measures, or should we change the rules on this, we want to avoid the ready, fire, aim syndrome. We first of all, I think, need to understand the problem. This is a problem that really, frankly, is only surfacing now. The business model is changing very rapidly. So you don't do good regulation if you don't understand the problem clearly. So the first thing we have to do is clearly understand what the issues are. But I think probably would be safe in speaking for almost everybody in the room. If we identify a clear problem and see a clear problem, I suspect all of us will be looking to take action to deal with that, because our primary charge is to keep high audit quality. And if we begin to believe that things in the business model are threatening that, I think you could expect to see the regulatory community around the world taking action.
I believe those are all the questions we have from in the room. Okay. Operator, we can now take questions from the conference call.
Thank you. Our first question comes from the line of Michael Cohen with Accounting Today. Please go ahead.
Oh, fine. I was wondering if you had seen any trends, like in particular countries having problems with quality control than other countries, whether you look at it on a country-by-country basis.
It's Michael Cohen from Accounting Today.
Yes, there clearly are differences among countries. For example, probably the most notable difference is sort of the adequacy of financial reporting and adequacy of disclosure. It varies from countries. Particularly countries with highly developed financial systems, I think, have fewer problems with that than other things do. The areas where there is great consistency around the world are things like fair value measurement and internal control testing. It appears that auditors all over the world don't do a very good job of testing and analyzing internal controls. Janine, you want to take a crack at that?
Yes, I think it's also good to add here that the survey shows the commonality in inspection findings, and these are material shortcomings that we came across. What also should be borne in mind is that there are, of course, differences amongst the firms that were inspected by our members, and there, if you would add it up, there could also be differences between countries. But yeah, the big concern we are having is, if you look at the findings, that there is so much commonality overall. If we add all the inspection outcomes from our members, the 30 members that contributed to the survey, if we add it all together, there you see a real, a trend in a sense, because at the last survey in relation to 2012, we had the same kind of issues, the same kind of findings, also in terms of significance, and that is really, a concern.
Oh, thank you.
Thank you. And our next question comes from the line of Ken Tysiak with the Journal of Accounting. Please go ahead.
Sure. Thank you for having me and for doing this. I wanted to ask a little bit. It was mentioned that structural, cultural, and behavioral aspects that you really think that they play a significant role in these findings. I'm wondering if you have an example or two that you could give me.
Well, I mean, a couple of examples would be the partner workload, for example. The ratio, the leverage ratio. What's the ratio of partnership to staff work? What are the ratio of the availability of experts? How can you correlate, for example, audit findings with differences in those measures? Things like that. That's the kind of thing that people are beginning to look at and beginning to see if you can perhaps quantify that and draw conclusions from that. Compensation structures, for example. You begin to look at what gets rewarded in an accounting firm. Is it business getting? Is it audit quality? How do you measure audit quality? But these are the kinds of questions that, as individual regulators and together, we are beginning to ask at a very granular level. IFIAR, for example, has a committee, the Global Public Policy Committee, led by Brian Hunt, the Chief Executive of the Canadian Public Accountancy Board, that meets with the global leadership of the Big Six firms 3 times a year. And the meetings are held around the world, and we require them to present to us quite detailed data about the operations of their firms, about what's going on, and we are beginning, and their efforts to both measure this and to see what's happening. And we as regulators are beginning to look at these things. So those, I think, are some examples of the kind of behavioral things that I'm talking about. Janine?
Yes. I also think that firms are also seeing that, you know, the more traditional kind of responses that they have given to audit quality issues over the last years that were more in the area of more training for their people or more guidance for the audit teams when they were doing their audit, were not very successful in achieving improvement of audit quality. So they're also now getting to a point that they see that they have to look deeper actually into why are there these material shortcomings in too many cases in their audits. And the examples that Lou was giving are, there are more to mention, but there were those kind of things is really important for the firms now to consider, and also for us as regulators to see that the firms are doing this really in-depth analysis on what are the underlying factors, and for us regulators also to challenge them on that. And I would also hope actually that the international leadership of the network firms would also give, in that sense, their support to the national leadership of the firms that we are all regulating nationally, since we also have these problems on a global scale. There might be real structural, sector-wide underlying root causes. So that also requires, we think, a response by the global leadership of these firms. So they have also a role to play, a very important role to play, to stimulate in-depth root cause analysis by the national network firms and to give the support they need to improve audit quality.
You know, one thing that's, as you think about this, while there are quite clearly a lot of problems in audit quality around the world, you have to put this in context. Part of this comes from the fact that this profession is being subjected to a level of scrutiny now, detailed scrutiny, that is both new and probably unique in the way any profession is looked at. For example, at least in the United States, we do not look at lawyers or doctors or engineers with the level of scrutiny by experts. And, you know, the people who are doing this looking are themselves, the regulators are themselves great experts in this area. So this profession is being subject to a level of scrutiny that's really kind of unprecedented. So I'm actually not all that surprised that we're seeing these kinds of things.
Thank you. Our next question comes from the line of Michael Rappaport with the Wall Street Journal. Please go ahead.
I I know you said that there are methodological issues that prevent you from drawing conclusions about whether audit quality has improved year over year. That said, is there anything, any numerical metric you'd point to say that in terms of the overall prevalence of audit deficiencies around the world, in the sense that you can look at a PCAOB inspection report and say X number out of Y audits inspected had deficiencies? Is there anything that you can point to like that would speak to the overall prevalence of deficiencies worldwide?
It's hard to do that. What I think I would say, and this, I may get in trouble for saying this, I think those of us in this business do have a sense that audit quality is improving, that there are still problems, but that certainly if you were to look at what auditors, particularly auditors in the largest firms, do compared to what they did 5 years ago or 10 years ago, I think we have an impression that things are getting better. It's very hard to draw quantitative things, and the level of progress around the world is different. Partly because regulation is, as Janine pointed out, the regulation of auditors is a very new business. The PCAOB has been doing it longer than anybody else has, and we've only been doing it we basically started inspections approximately 11 years ago. So a number of the regulators have only been in the business 3 or 4 years. It's very hard to draw that kind of quantitative analysis that you'd like to have, Mike. I mean, I hope over time we can do that. I think once the data set gets bigger, we should be able to do that. But as I said, my overall impression, I'm looking at my colleagues out here to see if anybody's shaking their head violently no. I don't see anybody. That my overall impression is that there is an improvement in audit quality. Janine, you want to comment on that?
Yes, I also think there is an improvement, in particular in the sense that a lot of investments have been made by the firms in improving their internal quality control systems. And there is also, from the perspective I have, a lot more attention to audit quality, and also, well, the management of the firms have it really high on their agenda. The problem that I see actually is that somehow, and that is then also the big question and the challenge for the firms, is somehow it does not yet show when you look as regulators into the audit files and see and assess actually what the quality is of that audit, that particular audit. And that is the big question, I think. So then, yeah, we're back again at the whole thing of we're looking for sustainable solutions, so there needs to be a real good analysis. How come that it also does not yet show on the level of engagement?
And where it doesn't show, what's interesting, it's a failure of consistency of execution. I mean, I think you could look and see that the training methods are better. Supervision is probably better in most of these firms. The best audits are very, very high quality. It is a problem of consistency of execution.
Thank you.
And our next question comes from the line of Carlos Martin with the accountant. Please go ahead.
Hello, good morning. Thanks for giving us the opportunity to ask. Picking up on the point about the scrutiny of the profession that Ferguson just made, I wonder, I know that this varies from country to country, but if regulators were able to publish the results of their inspections in all jurisdictions, would that prevent audit failures and therefore improve audit quality, or to put it more simpler, would higher transparency improve audit quality?
My personal view is that it would. I mean, I'm a great believer that sunshine is the best disinfectant, to quote U.S. Supreme Court Justice Louis Brandeis. But so my view is the greater transparency, I think the more effective our work would be. Janine, you want to? Yes,
I have the same personal view on that. I think also if you look at the system in which auditors operate in the audit market, actually, there's of course also an important role to play when it comes to the audit committees that have an important role in the nomination, evaluation of auditors, audit firms, and for them to do a good job, and also to stimulate, I may say, competition in the audit market on quality, and maybe not only on price and other factors that we currently see a lot. It is important that there is transparency from the regulators on the outcome of inspection findings. It would help if that would be, of course, public reports on the audit firms, but I also personally believe it would be very, very good if audit committees of the companies of which the financial statement audit has been reviewed by a regulator, that those findings resulting from that audit file review could be shared with the audit committee concerned. And that is not yet common practice amongst our IFIAR members, but personally I think, and that has of course to do with a confidentiality arrangements. As regulators, we operate of course within a legal framework, but personally I think it would be a good way forward to also have more transparency on the outcomes of our inspection work.
I would note that in the United Kingdom, for example, the audit regulators do share the results of inspections with audit committees. And IFIAR has a new initiative right now to increase outreach to audit committees. For example, at this most recent meeting, our investor working group had 4 audit committee chairs from some of the largest companies in the world speaking to us. And I think as individual regulators, many of us are reaching out more and more to audit committees to explain to them what we do, how we look at audit files, to kind of help them interact with their own their own auditors.
Yeah, I also believe audit committees can contribute to improvement of audit quality in that sense, if they would have also more information.
Thank you. And our next question comes from Elizabeth Bunn with MLEX News. Please go ahead.
Hi, thanks. I was just wondering, of the accounting firms surveyed, which firms raised the most red flags or were found to have the most critical deficiencies?
We don't disclose that information. That is something that we do as an individual regulator, but we do not, in this survey, we have not thought it was a wise thing to call out specific firms. I can tell you that they all have issues.
Also has to do with what I was saying before. We all, as individual members of IFIAR, we operate in a legal framework, and as there is not yet common practice to be able to publish inspection findings per firm, this situation also makes that when we do a survey on a global level, we cannot, publish firm-specific findings.
Thank you. Our next question comes from the line of Francine McKenna with Forbes. Please go ahead.
Hi. It looks like we're having regulation diverge. For example, this new EU regulation about auditor rotation and prohibited services. And we've had some divergence in the past, in particular between the U.S. and Sarbanes-Oxley and other large countries and regions. My question is the international regulatory community ready to enforce cross-border regulation when you start having multinationals audited that perhaps have headquarter in an EU country and significant operations in the U.S. or vice versa, or for example for dual-listed companies? In other words, how are we going to sort that out, and how are we going to police gamesmanship by the audit firms in terms of their opinions?
Well, I think you point to a good problem, obviously, when there is divergence in regulations, there's always the possibility of arbitrage between regulatory regimes. We're quite aware of that It also, frankly, if you end up with regulatory regimes that are inconsistent or send people in different directions, it can make it difficult for the auditing firms to operate. We're quite aware of that. I think a lot of what we talk about is how can we converge things like standards and whether auditing standards, accounting standards, how can we get a greater degree of convergence on that? But remember, the overarching framework of this stuff in which we all operate is not set by the regulators themselves. It's set by legislatures, and legislatures do what they need to do as their perceived needs of their own communities are. So we don't really control that, but you point to an important problem. Janine?
Yes, I agree with that. Yeah, we cannot, so to speak, enforce cross-border regulation, but I think one of the biggest advantages of having IFIAR as a platform where we as regulators can cooperate together, can exchange information together, will also somehow lead to at least convergence over time of the way we do our audit oversight. But still we have there, of course, the issue that there could be different requirements in different parts of the world that are imposed by legislators on the audit sector.
Thank you, and we have no more questions in queue.
Thank you, operator. We have one more question from a reporter in the room, Laura Salzberg from BNA, and if you could pull your mic towards you.
Right. I just had a question about the role that the Center for Economic Analysis would be playing, and how that will affect these.
The PCAOB, Center for Economic Analysis. Part of what that center is to do is to try to bring very talented people, thinkers in to look at these questions at a very fundamental level, to look at some of the fundamental institutional, behavioral, structural causes of problems and how we can do things, to really provide a higher level of analysis than has so far been done. It's in some ways sort of like to be an in-house think tank on this. So I hope to do some very fundamental thinking on it. We're very optimistic. We have so far a very distinguished staff with Luigi Zingalis and Christian Leutz from the University of Chicago, the Booth School, and we're looking at bringing fellows in here. So this is something we think has the potential to bring some real thought leadership to these issues.
We have one more question from Sarah Lynch and Reuters.
Can you just briefly discuss how the U.S. fares compared to the rest of the world, since the PCAOB has been the regulator working on inspections the longest?
Well, what I can tell you is, you've seen our individual reports. We issue reports on individual firms. You can see which are available publicly. You can see that problems continue. I can tell you that of the inspection themes, the two most common inspection themes around the world were fair value measurement and internal control testing. That's also consistent with the United States. On other issues, there are some differences. Between the United States and other countries, but there is a very high level of consistency in these results.
Those are all the questions we have in the room. We'll now go to Adrienne.
As we have no further questions, we'll close this session. We just want to thank everyone for attending this news conference on the phone, via the webcast, and here in person to hear about this very important 2013 inspection findings of IFIAR. So thanks again for joining, and with that, we'll close the session.